This is episode 21 of Zen and the Art of Real Estate Investing with my guest, Matt Picheny. I knew I was going to say it right this time. Matt, welcome to the show. It's great to have you.
Thanks, Jonathan. It's a pleasure to be here. And you did say it right. So that was awesome.
Yeah, I got that little practice on the pre-crawl. Let me just read in your bio and then we'll get right into talking about it. But this is very interesting. So Matt is a real estate investor, Tony Award winner, and author of the best-selling book, Backstage Guide to Real Estate. He is focused on developing passive income streams that enable investors to write their own story. That's a pun in there. I like it. And choose how they want to spend their time. He has over 15 years of experience. This is what I really love: revitalizing and elevating communities through real estate investment. Has invested in over 10,000 apartments nationwide. How did you get started in this? Well, since I know your background is in the stage, where did those two converge?
Well, I moved to New York City to pursue a career in theater and was a professional actor for 5 years and started doing computer stuff on the side as a hobby. And I ended up, this was in the mid to late 90s, I ended up being able to start my own boutique agency doing website development.
Oh, okay.
So I was doing that, and this was in the dot-com heyday, and then 2001 came along, and the dot-com bubble burst.
Yeah.
All of my clients were going out of business or not spending any money on any digital marketing efforts. And at that perfect time, I got a phone call from my landlord who told me I had 90 days to get out of the apartment that I was living in.
Yeah.
So
this is a common story. It really is. I love it. Sorry, keep going. It's going to be interesting.
Well, yeah, I mean, I was in a place where, like, what was I going to do? I wanted to stay in New York, but I didn't have a job. I didn't have, real income coming in. What I ended up doing, Showtime, the cable television channel, they were a client of mine, and they offered me a position in-house, and I ended up buying an apartment way, way, way uptown, not necessarily where I wanted to live, up in Washington Heights. And about 2.5 years later, I sold the apartment and I saw my initial investment more than quadruple in value.
Good timing. But when that happened, is that what kind of jettisoned you into what you wanted to do and you didn't think about it before? That's usually...
In that one transaction, I made more than I was making in my yearly salary, right? So I was like, okay, how do I make that happen again? And I started doing real estate as a hobby. And so I did real estate as a hobby for about 10 years before I started doing it full time. But that was the impetus for the whole thing.
Yeah, that's a great note, though, because as I look for kind of things that are consistent across the board with other guests, and it's very important for new investors, most people stayed working their job, making money until the time's right where you can do real estate full time. And I feel like, with everybody out there wanting to get into investing before they have enough money, it's like almost all of these stories are the same. You kept doing your job and it was a hobby that became a passion, but that's interesting to note because I think it's helpful to know, like, you still got to work the job because you need capital to do the investments. I know you're going to get into syndication and things like that, but your first one was the thing that, I mean, if you quadruple on the first one, that's pretty exciting.
Oh yeah. I mean, incredibly exciting. Right. And that's what really got me hooked. And then I had some other deals that didn't go quite as well. Quadrupling is quite a do to almost 2.5 years. It's
that's quite a bar. That's quite a bar to set. That is interesting though. Then you could maybe make like 1.5x and think it's a failure because you did so well on the first one.
Right. I'd be thrilled with 1.5x in 2 years,
Yeah. So on the first one that you bought and did the 4x, did you end up doing any work on it, or was it just the appreciation of the area? Oh, you did. Okay, great.
Yeah. So, I mean, you said good timing, which is right. It was fantastic timing. I can't take credit for everything, but I can take some credit for the improvements that we made at the property. And it was a co-op building, and I got on a committee and we renovated the lobby and the hallways, which had looked terrible when I first bought the place. So that made the place look a lot more expensive, which was nice. And then the interior unit it was very cosmetic. I didn't do any like major rehauls, but it needed a paint job and there was a lot of cracks in the walls. And so we patched up all the cracks and painted it right when I moved in, actually. And so the place looked nice, but then the hallways and the lobby renovation were huge, and it was an area that was gentrifying. So it was an area that was
Yeah.
definitely up and coming. I mean, right before I bought it, they had just opened up a Starbucks around the corner, right? So
Right.
it was the property was on the area was on its way up, and New York City real estate at the time was also doing well. So it was a convergence of a number of different things.
Yeah, you said something important though, Starbucks, and I know a lot of people just rail them because their coffee and stuff so expensive, but Starbucks is probably one of the best data researchers on real estate out there. And if you know a Starbucks is there and the gentrification hasn't started, it's going to, because they've done better research than us. Did you
Well,
know that at the time?
back in that time, back in 2001, when I bought the property, I did know that. I was like, well, when the Starbucks moves
Yeah,
in, that's great.
Starbucks and Whole Foods. Yeah.
I don't know if that right, and Whole Foods. That's funny because the property that I bought in Brooklyn was right near a Whole Foods that had
Yeah.
just opened, and I was like,
Yeah.
oh, those are things. I don't know if that's still the case with Starbucks, just because it's been around forever, and I feel like maybe they have opened up everywhere. I don't know. I have no idea. But I know that if there's a Starbucks and a Whole Foods around the corner, it's probably not a bad area. Probably.
Yeah. Well, I
So,
think it's like you said, you're looking for those type of things. Maybe it's not, maybe now it's Trader Joe's or something else, but you're looking for those that are in areas that you kind of like, wow, okay, I didn't know this area was ready for it. They've done the data research. It means it's coming. And that's the time to definitely get in there. That gives you a chance to use other people's research to be a smart investor.
I heard a story, and I don't know if this is true, Jonathan, but this is what I heard. I heard a story that when Wendy's started, instead of spending all the money on demographics and research, they said, let's just put a Wendy's like within a tenth of a mile of
Yes.
every McDonald's.
Yep.
Because they were like, we know McDonald's must have done the research, so we just put it next to a McDonald's. We're fine. I don't know if that's true, but that's
and there's enough to go around. I mean, there's enough real estate to go around. That's why I think it's interesting. You don't always have to be the first person in or the last person. There's always going to be adjustments in the market. So how did you go from, your first couple into getting what you've got into now, which is large scale multifamily apartments all over the place, a lot in Texas? What was the journey to get there?
I wrote a whole book about the journey. It's quite in depth, but going from the first place that I told you about, and then I ended up buying a piece of land and building a house, and then I started doing some other things. I got involved in some fix and flips,
Okay.
and then eventually found out about, and this journey is like a 10-year journey, right? But
Yeah.
found out about real estate syndication, and I had always wanted to go bigger. But I thought I needed, like, I don't know, some really rich benefactor. Like, how do I have that kind of capital? Like, how am I going to do that? And then I was like, oh, wait, I could put money together with a bunch of investors. This makes sense. So that's once I started going down that syndication route, that's when I started really investing as a passive investor. And so 2/3 of my portfolio are deals that I'm passive in. And then I have a third of my portfolio, which is almost 4,000 units, that I'm a general partner in. And so those deals are ones that I'm actively running and managing.
Yeah. Now, I want to see if you'd agree with me on this, because syndications to me are really, that is passive investment, but people use real estate investing and like to call that passive investment. But most of real estate flipping, landlording isn't passive, especially if you're not a GP. If you're an LP, it is more passive. And that's a great way for people to put money in and watch it and still be able to know what the property is, but don't have to make decisions, right?
Yeah. One of the things I learned from building the house that I did was that I didn't really want to be very active in a lot of my investments. I knew I definitely didn't want to be the property manager, because that's what I was doing.
Yeah.
So ever since then, everything that I've done, I've made sure that there's a professional property manager. Once you have a professional property manager involved, it does sort of become passive. Like I have 2 single families that I own that I consider passive. I have a property manager. They do everything. I just read the report when they come in. But yeah, if you're flipping a property, it's definitely active. And I know a lot of people who say that flipping properties isn't really real estate investment. It's a real estate business.
Yeah.
But it's not necessarily an investment because you're just in and out so quickly. I don't know if that's right or wrong. I've just heard people say that.
Yeah, I mean, property management is interesting. I think, like you're saying, if you do it at scale and you know what you want and you have a trained property manager, you are going to be much more in the passive end. But like new investors will buy something out of state and then hire property management, and it's just one, you're killing all your profit to do that on one deal. You need scale to be effective, because then you don't have to waste all the time. Also, it's a time management thing, and I think you knew that right away, which is great for all investors to identify what they're good at in the investing field and what they know they're not good at. Because the longer you spend trying to do the stuff that you're bad at, the worse decisions you're going to make and the more frustrated you're going to
Or it could
become.
be something that you're good at, but you just don't like doing it.
Yeah, or somebody else can do it even 80% as good and you can do something else like that you
Right.
like. Yeah.
Right. Or like the best value of your time. If you can hire someone who can do it for, pennies on your dollar, you know what I mean? Then it
Yeah.
makes more sense.
Yeah, absolutely. So when you started doing fix and flips, were those in the New York area as well, or were you doing those
No.
out further? Okay,
No,
where did you start?
I actually did those in Ohio.
Okay.
Yeah,
How
which
did
is
you land on Ohio?
it seems kind of random. I have
Yeah.
relatives that live in around Cleveland, Akron area. So and I visit them, and I knew that the property cost of those properties was far less than anything
Yeah.
in New York. I was actually living in Miami for a lot of that. And same thing, like
Yeah, of course.
the cost. If I screwed up on a deal in Miami, I would be in big trouble. Where if I messed up on a deal in Ohio, wouldn't necessarily be the end of the world.
Yeah.
So and it was all my own money at that time. So, but it was good. I learned a lot of lessons. Uh, you know,
Was it easier for you to choose those markets because you had what we call boots on the ground there? Like you've been there, so you know the areas, but you also have relatives who can go do a drive by and check if there's something happening.
it gave me a level of comfortability. I mean, I being that I couldn't do it in my backyard, I had to pick somewhere. So might as well pick somewhere where you're right. There are essentially boots on the ground. There's somebody
Yeah.
nearby who can, if the house is on fire, yeah,
Just for eyes, I mean, a lot of people say, "Oh, I live in New York, or I live in San Diego, or LA. I can't invest." And then what I try to tell people is the best first list to make is make a list of all the family and friends that you actually like and every place that you've ever lived, and then compare those to markets that are maybe potentially gentrifying. And there will be some that touch all those bases because you did exactly what you do. Cleveland doesn't have to be the best market, but the prices are great. And you know someone who can check up on the property. And you also yourself know the area, which helps give you, like you said, a little bit more of a comfortable feel than just picking like a random, thing because somebody told you that's a great place to invest where you don't know anyone, don't know any contractors, and you're not going to be able to get that done. So how many did you do in the Ohio area until you stopped doing that?
I did two. I did two, and I was done.
Yeah,
I,
it's a lot. Yeah.
as I was doing those, I was doing this. I started doing syndications, and I was just like, yeah, I'd rather put my time and my effort and my focus on that. I mean, I did two, but it wasn't like they took a long time. It wasn't like
Yeah.
on the TV show where it's like, oh,
Yeah.
boom, boom, boom. That second one, I mean, that was well over a year that we were in on
Yeah.
that one. So, like, I mean, it might have been closer to 2 years. We were in that one forever because there was all these things that kept getting discovered that, oh no, now we have to fix this. Oh, now we have
Yeah,
to
of course. That's all part of the learning process. And like you said, you made the smart move by trying, knowing not to do that in the backyard because the prices are too expensive. You try to do that in Brooklyn and you mess up. That the carrying
Mhm.
costs are crazy. Cleveland at least, or Akron, anywhere around there, like, okay, leverage wise, I can withstand this if it doesn't work out perfectly, like you said.
Yeah, I mean, it was. I don't even know, like 20th of the price. The properties I was buying versus what I might get in Brooklyn or Miami. Like it was, yeah.
So what led you to syndications? Was it the hope for more passivity, or did you talk to someone or come across something that led you into something that turned into this large scale venture?
I knew I wanted to do real estate full time, having done it as a hobby for about 10 years. We moved to Florida, and I made the decision that I wanted to do it full time after listening to Robert Kiyosaki's Rich Dad Poor Dad.
Yeah.
and also listening to the soundtrack of Hamilton and listening to the entire cast telling me to take my shot, take my shot, take my shot. And I was like, all right, I'm going to take my shot. And I invested. I said I'm going to be a full-time real estate investor, and then was trying to figure out how to make that happen. I went down the tax liens route, and I did some flips. I bought some single families. I had done that kind of stuff before. When we moved to Miami, we kept the place that we had in Brooklyn, which was a duplex, which I had house hacked, even though I didn't know there was a thing called a house hack.
Yeah.
If I buy something that has someone in there, then actually they pay more.
I get money. Yeah.
Rent. Yeah. So because we lived there for a while, and then when we moved out, it was cash flowing, which was great. So I had kind of run the gamut of most of the things that you can do in real estate.
Yeah.
But I didn't even know that syndication existed. And I was reading and listening to podcasts and all kinds of stuff. And then on some podcasts, I heard somebody mention this, because this is a while ago. There was no podcast out there about syndication. I heard somebody mention something about a syndication. I was like, wait, what? And they had their own podcast. And I went on to that podcast, and then I don't know what happened, but somehow I found out that there was this conference in Dallas, and they were going to talk about syndication. And so I bought a ticket and went down to Dallas for the weekend and drank the Kool-Aid, and I was like, wow, because I always wanted to go bigger. Let's talk about the property real quick in Brooklyn, right?
Yeah.
I have bought this property in Brooklyn as a place to live, but also I purposely got a duplex because while I was looking for a place to live, I came across one that had a rental, and I was like, oh, I can use that income. That makes sense. So the property that we bought is a 2-unit property. Both units are pretty much identical, except the bottom one has a backyard, and that's the one we were going to get. And the top unit that doesn't have the backyard, the rent that was already people in there, the rent that they were paying was more than half of what my mortgage payment was going to be. So we bought this duplex, and the first floor unit was a little bit nicer than the second floor unit because we had a backyard, but otherwise they were pretty much identical.
Yeah.
But the people who were renting the apartment upstairs actually were paying more than half the mortgage. So I knew right away that if we ever moved out, we could probably charge even a little bit more for our unit. And we actually renovated our unit when we moved in, so we could charge even more. But we would be able to cash flow off the property. And it was like pretty good. And so my initial thought, like way back then, was I want to do more of these. I just didn't have the capital to do it, right? You're looking at least 7 figures to buy a duplex in Brooklyn. Yeah. So I just didn't have a down payment for that kind of thing. So my thought back then was, oh, well, I'll just keep working my corporate job and, save up for the next 4 or 5 years and hopefully have down payment for another one. And then just keep rinsing and repeating. But it would take a long time. Or how could I get lots of money? And then I found out about syndication. I was like, oh, that's how you can get lots of money to do these. But at that point, I realized that the deals in Brooklyn weren't necessarily the best deals that I could do. And I wasn't living in New York anymore. So I started to turn my sights to really the middle of America and mainly in the Sun Belt and start focusing in those areas.
So did you start out as LP doing the limited partnerships and then got into the GP part after you kind of figured out what you wanted to do?
I started both paths at the same time. I really wanted to do a deal as a sponsor. It took me 2 years to get my first deal as a sponsor.
Yeah.
Which is a long time, but it was a $10 million deal. It was 132 units. I mean, it was a really nice deal. So while I was looking for that, I was also passively investing. I wanted to generate streams of passive income. And also I thought, well, gee, I can learn a lot as a passive investor. Just watching this, I can not learn as much as if I was to actually be doing it, but I think I could still learn a lot. And I did. So I invested in, I think it's 5 deals before I closed on my first deal as a general partner.
Wow. Yeah. Okay. That's awesome. And then how did you get to the scale? What was the thing where you knew I can keep doing this over and over?
Well, it took me 2 years to get my first deal. It took me 1 year to get my second deal after that. So my first deal was 132 units. My second deal was 116, I want to say. And then the next deal I did was a big one. But at that point, I had investors who had done really well with me. They had been receiving cash on cash returns for 2 years on one deal, 2.5 years on one deal. No, about 2 years on one deal, and then we sold that deal. And when that deal went full cycle, those investors were thrilled with the returns that they got, and they started telling all their friends. So
Yeah.
that's when it really, when I had my first deal go full cycle, that's when it really started to balloon in terms of investors coming in and wanting to invest with me. But I mean, then I started doing deals that were like 400 units, 300 units, and it just kind of grew from there.
What process did you and the groups that you built go through to identify the properties? Where were you finding them? And, what was your qualifications in terms of, was it a data analysis and looking for an income, or you were looking for assets that were going to appreciate with value add?
So we were not looking for assets that were going to appreciate by themselves, right? Because I don't think that that's always going to be the case. And as we're seeing
Yeah.
right now, we're seeing cap rates expand, so values are going down. So my hypothesis back then was right, but I was wrong for many years, and now I'm right. But we wanted to force appreciation through value add, like you just said, right, Jonathan? So
Yeah.
that's what we were looking for. We were looking for properties that we could do a value add on. That's number one. But also number two, it needed to be in a good area. I didn't want to buy property in an area where population is declining, because then no matter how much appreciation I try to force, how much value I add, it doesn't matter. There's no demand. So we wanted to
Yeah.
find markets where there was demand, where there was employment growth, and therefore, where the jobs are, people go, right? So employment growth leads to population growth. So we were looking for that, and also looking for properties that were at the bottom of the market. So, in any particular submarket, if we could find a property where rents were $200 a month, let's say, $100 a month below the average, not below the top, but below
Yeah.
the average, we would check out that property and we would see, well, yeah, there's obviously a reason why
Yeah.
they're charging so little, because the place is in shambles. So can we go in there? Can we fix it up? Can we bring the rents up to the middle of the market, be really great to the residents there, make them want to stay, but pay a little bit more, bring in new people, renovate the units when we're bringing in new people, and increase that NOI, through those things, such that it's a profitable venture. And we found pretty consistently that we're able to do that.
Yeah. Well, that's great. And then, so how, I guess, how were you building out the group of investors? In the beginning, they didn't come to you. So were you going to people? How did you get started in terms of building other people to invest in your deals as a GP?
So, fortunately, I didn't get involved in this. I know I look kind of young. I'm turning 50 next year, so I had been in business for a long time. I had a career in New York City, 18 years in business, and
Yeah.
so I, over the years, met a lot of people, and also just, I'm a friendly guy. Like, I had a good network of friends. I'm not like Mr. Popularity or anything like that, but like, just over time you meet people.
Yeah.
And the thing that I never do, I don't know why, maybe I'm just like, I never deleted people from my like, if they got in my contact list, they were in my contact list. Like,
Yeah.
oh, I quit my job, let me delete all my work friends. Like, I just left them in there. So when I first moved down to Florida and started doing the real estate investing thing, I sent an email out to I just took everybody in my contact list, and I
Yeah.
was, hey, I moved down to Florida and I am now a full-time real estate investor. And I thought you might want to hear about this, but if you don't, like, unsubscribe here, please. I don't want to spam you. I don't want to clutter your inbox.
Yeah.
But if you find this interesting and you want to come along the journey, like, I'll send you an email every once in a while. And I did. I used to send them out on a quarterly basis. Now I send out really useful updates on a monthly basis with investor tips and knowledge, all kinds of cool stuff that investors love. But back then it was just kind of updates like, hey, I just flipped this house, and or I just did, a passive investment in this thing, or now I invested actively in this. The thing was, I told you, it took me 2 years to do that. Whenever I did an investment as a passive investor, I would post about it on Facebook and write about it in my newsletter. And I was extremely clear. I am a limited partner in this deal. Like, thank you so and so for sponsoring this deal. Like, I
Yeah.
never made any illusions that I was the one running the deal, just that I was investing in the deal. But 2 years of people seeing that, and also them knowing me for 10 years before, always doing real estate. Like, most of my work friends knew, like, oh, Matt just built the place in Connecticut. Like, they knew I had always been doing real estate stuff. So when it came time for that first deal of me having been involved in real estate in one way or another for 12 years, it wasn't a big leap for friends and family, and when I say friends, even like former work colleagues, because I consider them friends, to say,
Yeah.
oh, okay, Matt's doing this thing. I raised almost twice as much as I thought I would be able to.
Wow.
I had a partner who brought in a little bit, but I raised like about 80% of the capital on that deal. Um, and I brought a partner in who had a lot of experience. He had done 10 deals. So that
Yeah.
was the other thing. I told everyone, hey, look, this guy's done 10. And we were able to close on that deal. And ever since then, I've continued to try to do things to increase my exposure to possible investors. I do be a guest on your podcast, right?
Yeah, for sure.
Articles for Forbes and Fast Company. I have a book that came out that's a #1 bestseller. So I do a lot of different things. I post articles, and I'm doing all kinds of different things to try to let people know. I speak at conferences a lot nowadays. And that's how I continue to grow the investor database.
Yeah, it's interesting if you look at the way you got your first people in. It's something I talk about a lot, that relationships in real estate and real estate investing are so important, because the way that you got really going is by existing relationships that you had, whether they had to be resurfaced by, a kind of a cold email, hey, and then, onto an email list. You still have to have built a trust relationship there at some point for someone eventually to give you money.
Can I tell you a story, Jonathan?
Yeah, absolutely. Please.
So this guy, like a couple months ago, reaches out to me. His name's Rob, and he's like, I get an email from him. He's like, hey, remember me? Like, and he tells me where I should remember. I definitely remember this guy. And he's like, I've been following your, I'm on your email list. I've been getting your emails for like the past 7 years now.
Wow.
He's like, I'm interested in maybe investing in some real estate with you. And we got on the phone and we caught up. But this is a guy that I knew from back when I had my own advertising agency. So back in like the late 90s, I met this guy, and he'd been basically reading my emails for 7 years. And then finally was like, all right, you know what you're doing. Like,
yeah,
let me
it took 7 years, but you got there.
Yeah, but that's what you're talking about, though, like sort of having those relationships, and maybe they're old relationships, but you can rekindle them.
Yeah, and I think it just goes of how you build relationships. If you're an authentic person, you're able to build, and then later it doesn't seem like an ask. Like a lot of people who are out looking for funding, I get calls all the time like, do you want to fund my deal? I'm like, I don't even know you. Why would I give you any money? It makes no sense. I can look at the paper, but like like there's no trust relationship. So I think it's important to note, because like we said in the beginning, I mean, everybody's trying to move so quickly to get from, A to Z, that relationships are another part that's really important in the journey for you as a GP or as an LP. If you're an LP and you want, you need to know that your general partners have your best interests at mind, and there has to be a trust relationship there, not just data to win in those things.
Yeah, and I only send my deals out to people who join my investors club. I have an investors club, and it's like, if you need to tell me that you're interested in my deals.
Right.
Have a quick conversation so I know who you are and what you're about and what you're interested in before I'm going to even let you consider investing in one of my deals.
Yeah, I mean, that's a much smarter way of doing business. You have a set group of people who are already looking for something. They already are interested in being in that group, but they may not get the first option. They'll be waiting for the second one. Yeah, I love it. So what inspired you to write the book? Was it your journey that you had been on that you thought could help other people do the same thing?
Not really. Because the book really isn't about active. It's more about the passive, and it's written for the passive investor with them in mind. I lived in Boston for 4 years. So just real quick, I was in New York, then I moved to Miami for 2 years, Boston for 4, and now back in New York. So while I was in Boston, I ran a meetup, and the meetup got really big over time, and people knew that were in the meetup, what I was trying to do with the meetup was like, hey, let people know you can invest out of state, you can invest in syndications. And people would come across syndications and come to me and say, hey, Matt, like you run our meetup group. I know you invest passively. I know you run your own deals. What do you think of this deal? Should I invest in it? And I would say, listen, I'm not going to tell you if you should invest in a deal or not, but I'm happy to sit down with you and go through the underwriting and tell you like the questions that I might ask. And it was cool doing that for a little while. But what happened was, as the group kept growing and growing and growing, more and more people were wanting my time. And it was really like killing my day. Like I was not able to get my work done. So it's like, all right, what do I do? Like, how do I make this? So I decided to write it down. So I made like a little, I thought it was going to be like a little handbook. And by the time I got done with it, it was around 70 to 80 pages long. And it was the most boring thing you've ever read in your entire life. And it was just dense, like filled with good information.
Yeah.
But like it, for somebody who doesn't really like, for you, Jonathan, you're really into real estate, you would read it. But most people, especially passive investors,
Yeah.
So I thought, how do I make this palatable for people to read? And I said, you know what? I can take my whole journey and share the lessons that I learned. Like it starts off at the very beginning, like with what an asset is and what a liability is.
Mm-hmm.
And then by the end of the book, I'm doing a 1031 exchange and an air rights deal. Like it gets very, very complex. And as I go through the journey, I share with people these 18 different keystone concepts that I've learned along my journey. And I also define 60 different real estate terms throughout the book. And there's like an index at the end. So it's a really great book for people who are looking to passively invest in deals, to be able to understand deals well enough to actually look at the underwriting and be able to make heads or tails of it, whether it actually looks good or there's some fluff. Or someone who wants to be a sponsor in deals. I think you can also be inspired by learning the journey. You will learn stuff, I think, in the chapters towards the end.
Yeah.
But I make the whole thing like really fun and interesting, and there's a lot of humor in there. So it's just like a good, fun book to read.
Yeah, that's amazing. And so how long ago did that come out?
It came out in February of this past year, so 2022.
Yeah, great. So this is like part of your book tour.
Yeah, it is.
Yeah, no, well, we'll obviously link to that. I mean, I think it's great. Real estate investing books, like you said, can tend to be boring. When you add a little bit more flavor to them and you talk about your own journey, I think it's much easier for people to connect and figure out what, their journey is going to be along the way.
Yeah.
Great. Let's get into some of the questions that we sent before. I asked you the most important trait for a real estate investor. You said persistence. Explain how that's worked for you and why you think all investors need to have that to be successful. I agree, of course.
Yeah, I have 3 stories in the book about persistence, like just earlier in my life, stories about how that helped me succeed, because I think it can help you succeed sort of anywhere in life to get goals. My first, I don't know, there's like so many examples, but like my first deal as a syndicator, that deal was on the market, and then it was taken off the market because none of the offers came in as high as the
Yeah.
And I chased it down. I ended up getting the deal. I ended up closing on that deal. That was my first deal. That was persistence.
Yeah.
I mean, but I could just go in and even before that, though, I spent 2 years trying to get my first deal, right? That's persistence.
Yeah. Like you said, you were trying to figure out what was right. I think a lot of people give up because they want that, like, the quick return. But I think, as you learn, especially more with passive investing, like it's the long term that wins. You can't expect to just win right away. It's learning about there's a lot of things that are going to go wrong as well along the way. Yeah, awesome. That's a great one. And here we go. This is great. I want to get more in depth on this one as well. One way we could all collectively make the real estate investing world better. You said reinventing property ownership as a positive for communities. And that's what you do with a lot of these syndications in the Texas area and in that area. So explain a little bit more why you're passionate about that, and then what you're doing with those properties in your syndications that can help reinvent the communities around them.
Sure. For me, I want to leave the world a little bit of a better place. I don't run a charity. I run a business, and we're in there to make money. But I do think that you can do well by doing good. And so that's really important and paramount to every deal that I'm involved in. And as an example, because Thanksgiving is just around the corner as we're recording this,
Wow, it
we
is.
we're giving away turkeys to our residents. We do that every year, but we do many different things. We'll do things where in the morning we'll do like a surprise and delight where we'll give out breakfast sandwiches. We've done bouncy castles and face painting. We do all kinds of different things for our residents to create a really nice community. We also do things like so the first property, as an example, when we bought it, it was in bad shape. The sidewalks had been reduced down to rubble. So like day one of our ownership, we had people in there putting in forms and pouring concrete and redoing sidewalks. They loved it, right? And then we did shortly right after that, we did a water conservation program. Now this is actually a four-way win. Okay.
Yeah, yeah.
Because what we did, we replaced 300 toilets, okay, and also shower heads and sink aerators and all of that stuff. The residents paid their own water bills, so it was a huge win for them.
Yeah, you're right.
Their water bill cut by a third. Okay, it was a win for our staff because all of these toilets were flapperless.
Right.
So instead of having those toilets that
fix
run
all the time, yeah,
they don't have to worry about it anymore. Okay. It was a win for our investors because we got a special Fannie Mae Green program loan, so we got a lower interest rate. And it was a win for the world because we were conserving water, right? So again, not curing cancer here, but doing things that are positive, making a positive impact for these communities. We want things to be win-win for everybody.
Yeah, I mean, I love the terminology win-win. I use that in my off-market acquisition, but I think on a large scale, when you're dealing with communities and multi-units, that many hundreds of units, when you can do something that not only helps everybody, is also going to save them money, and then it will over time create obviously better usage for like you said, it's just good that the cut down on just your staff having to fix all the toilets is, immeasurable. Yeah, I love that. How many of most of the large scale investments are in Texas, and there's a couple in other states, or is it all Texas?
Yeah, so like that first deal was actually in Kansas, in Lawrence, Kansas, and I've done some stuff in the Kansas City metro. Love Kansas City, but we've actually exited out of all those deals in Kansas and Missouri because of just market forces. Right? We executed our business plan. We were able to get a handsome return for our investors. We would love to reinvest in those areas, but we haven't found anything that pencils out. But we're continuing to find deals that pencil out in Texas and mainly in Dallas and Houston and some other markets within that sort of Texas triangle, right? So that's where we've been continuing to find deals.
Yeah, great. Here we go. Best book that you've read that influenced your career. This one is on my list and I haven't read it yet, so I want to know how it's influenced you. It's called Principles for Changing the World Order. It's sitting in my Audible to read list right now. How has that helped you in the investing world, or just more so overall thinking about what the future is going to be like?
It's a great book. It has helped me just to start to think about where we're going, right? And that's the whole thing, right? It's Ray Dalio, and his whole career has been based off of him looking at and it's funny because I was doing this before I even read the book. Like, my hypothesis has always been, hey, I'm going to look at historical data and use that to try to kind of extrapolate. They say, I heard this just recently and I like it. It was that something along the lines of like, history doesn't repeat itself, but it rhymes. Right?
I like it. Yeah.
So it might not be exactly the same, but there's certain things that there's going to be similarities there, right? And so what Dalio does in the book is he goes back into, the 1600s, or I think even maybe before that. Like, he does. He goes back to like the Ming Dynasty. I mean, he just goes way, 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 way back in time and looks at different countries. He looks at the Dutch. He looks at the British. He looks at the Chinese, and he looks at the rise of America, and he says, here are the different things, and he creates these different stages and the cycles, and he's all about cycles. He's all about looking at historical data. That's what he's been doing his whole career, looking at data, using that data to look at cycles, and then sort of extrapolate out what he thinks is going to happen. And he's been very successful. He runs one of the best hedge funds on the planet.
Absolutely.
So he's done a good job with that. And it's a great book, fascinating book, Ray Dalio's Principles for the Changing World Order.
Great.
Yeah.
If you could give one piece of advice to new real estate investors, what would it be based on your experience over this time frame? Probably 20 years for you so far. Let me see if I got that right. 17 years. What's one piece of advice that you would give to all real estate investors, especially new ones?
It's hard to nail it down to one. I'll say three things that are important.
Great.
Persistence, as we talked about earlier. Education is really important to make sure you know what you're doing. And then relationships. And that's probably the most important one. It's really all about relationships that you can develop with brokers, with property managers, with other owners, with people you can partner with, relationships with investors, right? It's all about relationships. And so that, I think, is, if I had to pick one, that would be the key thing.
Yeah, I mean, I wish everyone would really think about that, because it's when you don't have money to invest or you're trying to learn, all you can really do is offer what you have. And a lot of that is listening, understanding. And like you said, back to your second point is education. You can do those together. You can build relationships, get the education, and that will keep you persistent to your goals. And that's what masterminds do. And like you said, meetups, we do meetups with the same branded name as this podcast. And I think that's where newer investors can develop the confidence from seeing like, oh, there's people who did what I did. We all didn't just grow up, a baby and start investing right away. Everybody figures out along the way. So yeah, I couldn't co-sign that one more. I think relationships are always the most important. Awesome. Great. It's been great to have you. Your book, The Backstage Guide to Real Estate, is available everywhere, including on places like Amazon. What type of feedback are you getting from the book? I know it's been good because I was reading a bunch of the reviews before we hopped on.
I want more reviews. So if you read the book and you like it, you can put a review on Amazon. The feedback's been great. I've people tend to really like it. It's just very, it's relatable. I'm just telling my story, and I'm just like a regular guy. And I think people, the feedback seems to be, it's really good, and it's got the great educational nuggets in there. So I think that's why people like it.
Fantastic. And the best place to find you is at your website, which is picheny.com, Picheny.com. We'll link to it in the show notes. You can find the book there as well, right? And is that the best place they use to contact us there to contact you?
That is the best place. And there's tons of free stuff on like resources that you can download for free, or blog pieces. There's a lot of educational material on there, and it's all free unless you want to buy the book. So go check it out and
do both. Yeah, but it's great. I think it's really important to give away free resources, because then they get a preview of what they can get. Buy the book, highlight all the things that they like, put it into practice. Great. Matt, it's been an absolute pleasure to have you on. I really appreciate it. And I look forward to talking to you again in the future.
Hey, it's my pleasure to be on here. Thank you so much for having me as your guest.
All right. That was Matt Picheny. I'm Jonathan Green. This has been episode 21 of Zen and the Art of Real Estate Investing, and I'll see you next week.